Okay, let's start with the profit and loss. So the first number you want to look at when you're looking at a profit and loss is the net income. Obviously, if it's negative, that's a problem. You always want that to be positive. If you don't look at anything else, then at least look at that. Of course, with the caveat that these numbers have to be correct in the first place or none of this matters. So that's where we come in, is making sure it's correct, but hopefully you are making sure it's correct. In that case, the first thing you look at is the net income. The next thing you want to look at is your gross profit. So I'm going to back up to another year on the sample company that actually has information in here that gives us a gross profit. So let's move these dates back to 2022. Okay, so here we have the cost of goods sold for this company, this sample company here. So the gross profit is after direct costs of providing your services. How much is left over? This is really important because this needs to cover all the overhead. You usually want it to be maybe 50% or higher, 60, 65, 70%, depending on your industry. So in order to see what percentage you're at, you can go over here to compare to and click percent of income. Here we have the gross profit at 45.94%. Maybe that's normal for your industry. You should know, is that normal or not? Should we raise our prices or lower our costs? You can get straight to this report, by the way, by going to profit and loss as percentage of total income instead of this button up here. The other thing you can look at is you can display columns by months, and you can see how has your gross profit fluctuated. So maybe down here, okay, January was 66, February was 31, March was 51, May was 22. So this could tell you there's a problem somewhere. It can also be related to, if you're doing cash basis financials, that the timing doesn't work out, doesn't line up. So maybe all your costs are in May, but it was actually billed in June. So that's another reason that those might fluctuate. But we want to look at month over month. How are you doing with your gross profit? Once you have looked at that, your next thing is to look at your expenses. Is there anything that's really large that maybe shouldn't be, that gives you kind of a red flag? You don't need to look at everything. But see over here, you can look at, okay, 8%. Does that make sense? 4%. Maybe we're spending too much on repair and maintenance, and it might be worth it to invest in better equipment. Things like that are what you want to look at in your expenses. Of course, if your expenses are higher than your income, then that's another problem that you want to think about. And then finally, your profitability ratio. All the way here at the bottom, you have your net operating income, and the profitability ratio is 17.58%. What's your goal there? Do you want it to be 10%, 15%, 25%? You should have a goal that you're working towards and making changes to get you to that goal. This is before any unusual items. So like selling an asset or depreciation. So then that's why you might want to focus on this operating profitability percent instead of the regular profitability ratio here at the bottom. So your profit and loss should help you answer, first of all, did I make money or did I lose money? Net income. Where is my money going? Your cost of goods sold and your expenses. And then most importantly, what should I change to make more money?